You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Henry the FLOWMASTer Schwartz from CBOE. The Option Block is brought to you by CBOE. CBOE's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back together for your bi-weekly options extravaganza for the Thursday episode. Yes, it is time once again for the Option Block. My name, of course, Mark Longo from the THE. Don't forget the OptionsInsider.com, the place to go for all sorts of great content. Most actives throughout the day. People love that stuff. Just putting out what's active today. People can't get enough of that. And then, of course, a lot of the earnings stuff we put out there, links to all of your favorite shows, and a whole bunch more. TheOptionsInsider.com, the place to go. While you're there, of course, you can always check out a little thing we call TheOptionsInsider.com/pro. A lot popping off there. Great pro Q&A just yesterday with our buddy, the options guy, Mr. Overby. Nice to have him back on the network. It's been a while since we've chatted with him, tackling all your questions about the wheel and VIX and just about everything else he could think of. Everything you folks can throw at him. He tackled yesterday, so that was pretty fun. You could check that out over there, as well as the live streams for this, every other show we do. Options Oddities every Friday. And, of course, the awesome Pro Trading Crate. Congratulations to Wolfpack, our winner of our January crate. Want to get your name in the hat for the Feb crate? Only place to do that, theoptionsinsider.com/pro, the place to go to learn more. As we go around the horn and see who's joining us on the old OB Part 2 for the week. First, let's go out to the quiet, the sleepy, the tranquil hinterlands of Chicago, where we are joined by none other than the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the show, sir.
Always a pleasure to be here on this post-Valentine's Day edition of the Option Block.
Yes, I didn't get my flowers and chocolates from you, sir. I was a little disappointed, but I'll get over it. I'll soldier on with the show as we keep on rolling. I did not expect any hearts and chocolates from this person, listeners, because he is a legendary curmudgeon. We go out to the shores of Maine now, where we are joined once again by the rock lobster himself, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, I hope you at least treated your wife to a little something nice on V-Day, sir.
That was the problem with Valentine's Day this year. It was on Ash Wednesday. It's a fasting day.
So yeah, kind of limit your celebration. Are you not allowed to have chocolates on Ash Wednesday? I don't know.
Well, we did all the celebrating the day before. So I'll just leave the day before the celebration happened. So actually on Valentine's
Fat Tuesday, there you go.
There you go.
Exactly, on Fat Tuesday. So it's the start of, whatever, for people that are, in religious, in the religious way. So anyway, I got to say no to myself for 40 days.
It's a good thing to fast a little bit. It doesn't hurt you. Oh, it
does not hurt you.
It can't hurt you in excess, but we did the same thing, actually. We celebrated on Tuesday as well. Just lined up better with my schedule here. Speaking of lining things up, let's line up now with CBOE East, where we are joined. I can see him staring at me right now. It's kind of freaking me out. He is the FLOWMASTER himself, Mr. Henry Schwartz from CBOE East. Mr. FLOWMASTER, how you doing? You're looking pretty good because you're looking right at me.
I'm doing great and always happy to be here. It's always interesting times. It's so far it's a busy year for the options trading world, and then this week is certainly we've had a roller coaster, and we're not even done with the week.
Yes, we have had our ups and downs and our middles. Let's find out what part we're in right now, listeners. It is time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down what the heck is trading out there. We mentioned kind of the roller coaster that we had earlier this week. CPI coming in hot right after our show on Monday, so that sent the market into a bit of a tailspin, bit of a tizzy, vol popping a bit after that number on Tuesday as well. So we saw roughly 1.6% sell-off or so in the S&P, which got us back below 5,000. But of course, that was just a buying opportunity for Uncle Mike and his ilk. They said, wait a minute, I can buy the S&P cheaper than the day before. Give me more of that, please, because they've just been bidding it up pretty much every day since. Today started off a little bit of a mixed bag. We had the S&P green, but some of the other indices were red. Now coming in to start the show. Now even the NASDAQ, the laggard, has ticked green, which means we're pretty much full green on the screen. S&P up about 0.4%. So we're back north. We're actually up about 20 handles, and we're about 20 handles north of 5,000 again. So back north of 5K. Our sojourn below it was short-lived. NASDAQ kind of unched on the day, up a little bit, 0.05%, and the Dow up about 0.6%. And not to be forgotten, I was just talking about small cap straddles with our buddy, the options guy, yesterday. Let's pull up a little bit of the old IWM here as well to kick off the show. Small caps up, only 1.8%. What a beast small caps have become out there as well. So fascinating stuff to be found out there. All that green on the screen means even though we have been green last couple of sessions, we still have that shock to the system on Tuesday, which sent VIX. Actually, we had one of the better up moves we've seen in VIX in quite some time. So for all of you out there been saying, man, VIX doesn't do it. VIX can't get it done in these sell-off days. We saw a decent pop up to about 17.5 in the cash out there, which again, a better move than we've seen in the past, and also a good opportunity for some of you upsiders to actually make some cash. I was kicking myself, Mr. Rock Lobster. I was looking towards the end of last week. I was putting on some VIX. I put on the puts for this week were just ridiculously cheap, so I had to pick up some of those post CPI. And I had my finger on the button to also do the call. I was looking at maybe a Rock Lobster special in terms of a VIX strangle. I ended up just not pulling the trigger on the upside, and of course, I still have the puts for next week. Those can still pay off, obviously, but the calls over the last couple of sessions were where the cash was at. So that was kind of funny to me that the old Rock Lobster strangle would have paid off if I had pulled the trigger. But nonetheless, VIX right now, 1440, up about 0.8 of a point still from where it was from the Monday show. So we're still, even though market's been rallying last couple of sessions, we're still coming off the highs that were the Tuesday vol level into Wednesday. VVIX back at about an 84, so back to unched from where it was on Monday. VXX 1460, up about 0.4 of a point. UVXY 760, up about a third of a point. SVIX 18.5, down, a rare downtime for SVIX, down about 1 3/4 points from where it was on Monday. And UVIX 1140, up about 0.4 of a point. So interesting stuff. Let's go back around the horn, the opposite of the way we started. Let's go out to the land of CBOE East first, who I am staring at right now, and it's very distracting. Mr. FLOWMASTER, sir, what's catching your eye out there in the realm of CBOE East, sir?
So it's obviously it's a very interesting week. I have a couple interesting things. First of all is, I think we mentioned this massive VIX outright trade in the Feb 17 calls that was bought, I think, on January 12th. They paid about 66 cents for them. We looked at it. It really stood out because it was the largest outright trade ever to print in the VIX options. And it kind of looked like they weren't really going to work out to be much of anything.
You're right. They got the last-minute reprieve. You're right. I totally forgot about that, but you're right. They did.
They did. And so actually, after that pretty sharp sell-off on the 13th, everybody was kind of like, wow, that's a really big position. And it's going into VIX settlement, which was the morning of Valentine's Day. And I had the headline ready to go out, Valentine's Day massacre for VIX premium sellers. And we really could have had it if, we had a little bounce back on the 13th. And then, the overnight, nothing bad happened basically. And, we actually came in on Wednesday morning to the upside. And so the settlement was well below 17, and it turned out to be nothing. But that was really interesting because it could have been kind of huge. In fact, if you look at the highs on the 13th, those calls got briefly traded around $1.30. So, and remember, that was about a $17 million premium outlay. So they almost could have doubled their money. The other thing that was really funny was actually the range of price on those was actually a penny to $1.30. So there were actually some pre-market trades that printed for a penny. When I dug into them, it looks like it was a leg of a spread, but still, it's pretty rare to see that in a liquid contract, such a big range. So that was exciting.
Yeah, that's fascinating because you had tracked that too, and they only printed over $1 once before, and that was about 5 days after they traded them. They printed, I think, $1.01 or something ridiculous, and looked like, okay, maybe they're doing all right because they bought them for about 67 cents, I believe, and then that was about it. They never looked good again. In fact, we were joking about them on Vol Views last week, like, wow, that money went to die, kind of. And little did we know they had one last gasp left in them. If only they had closed.
They exactly. And actually, there's a couple, one very smart person who I pay attention to in the industry, Ronnie Israeloff, who I don't remember the firm he's currently with, but he's been at a couple very sophisticated quant investment shops. And he has kind of a spiel on hedging, and he's a big fan of hedging. But the key is to actually monetize the hedge, get out, and put the gains that you get from your hedge into the market immediately. And in his view, that's kind of the piece of the puzzle that's often underappreciated, which is, a hedge is great, but when it works out, you need to cash out, you need to invest. Otherwise, it really doesn't do a lot for you.
Yeah, that just backs up my old statement of never ride your open position. Certainly winners through VIX settlement. There's no reason to do that. Obviously, this is the size position. We're joking about it. Would have been a lot harder to facilitate that going into the close on. But you could have gotten it done, at least some of it. Monetize some of it at least, right, Mr. FLOWMASTER? You can't ride all of that through the crapshoot that is VIX settlement, sir.
True. Yeah. And because it's, you really don't know what's going to happen overnight and how the opening is going to behave. And could you have imagined if let's say we did have a rough overnight session in Europe and we opened up lower and VIX, let's say the settlement print was 18, 19, 20 points, which is totally possible if we had another % or so down. And then if we rallied back up, by the end of the day, VIX could easily be back at, 14 or 15. I think people would have been coming out of the woodwork saying, it must be rigged. I can't believe it. So it's interesting. I'll tell you, looking at the open interest, they actually did it does look like some of the position was rolled out of, not all of it, but I saw the open interest decrease there by about 60,000 contracts. Now there were almost like 380,000. So I'm not sure if that original 250,000 lot buyer was adjusting his position or if it was some of the other flow out there. But we definitely saw some firm trading as well, because I'll tell you, when that trade was initially opened, on the sell side of the 250,000, it was a little bit of it was market maker, but it was mostly firm. So I would imagine somebody didn't sleep that night.
Yeah, just another fascinating example. Listen, we say it all the time here. It sounds like we're beating a dead horse, but here's a real world example of, man, maybe you want to take some of these winners off the table. I'm looking here right now. Yeah, a bunch of them, about 60,000 of these traded on the 13th. So yeah, back when things were starting to look a little hairy earlier this week, and they traded for about 14 cents up to 54 cents, it looks like, on the day. Hard to tell if they were actually dumping them or not. It looks like some actually traded for $1.06. You're right. So yeah, just and a big print of 15,000 for 14 cents. So if they were bailing on some of them, they weren't bailing on them for much. But yeah, just a fascinating story. You said it many times, listeners. You put these hedges on, you pay money to do it. Get some value out of them before they're gone. So just another fascinating and or frustrating example of that. Speaking of frustration, he's always frustrated. He is the Rock Lobster. Mr. Rock Lobster, what are your thoughts on our friend here putting on the largest pretty much single block call print in VIX history and then doing nothing with it? And then B, what else caught your eye this week? Were you satisfied with the VIX move we had this week? I saw a lot of debate about it. Was it enough? Did VIX underperform? Where do you fall on that, sir? And then what else caught your eye this week?
Well, I did sell. I had some 16 calls that were left for dead.
I knew you had the strangle on. I knew it.
And I sold the 14.5 puts out the week before. And I was down probably 40 cents on the strangle, which is pretty rare for me to be down on them. But it happens, but no matter what, like you just said, I take the money on my VIX puts on Friday. Because that weekend, and I've never felt it was worth keeping them on, and better to have the lotto ticket the other way, if you need it. And especially when everything's pointing kind of in contango, but it's one thing when VIX really doesn't hit those lows, there's always like a little bit of, I think, kink in the market. Like it should be driving to lows, but it's not. So I always take that as a signal to just take what I can get and leave. And I sent a note out to students on Tuesday, like, offer your puts out now. Or I'm sorry, offer your calls out now. And I'm glad I did, because like the window to sell, Henry was talking about the 17s, and the 16 calls got to $1.90. But if you didn't have your order in there, like I was getting filled and they were basically trading 10 to 15 cents underwater to the cash, which, that's what the market makers are going to do, right? Because VIX cash, it's expiration, there's all kinds of funk. They also want to hedge and see what they could sell against. So, but they all filled. Like if you're in there at 190, you filled. If you're in there at 185, you filled. If you tried to catch it like 5 minutes too late, you were chasing it all the way down. So I think part of that too was the squeeze on a number of contracts. Because if you look at the VIX chart for Tuesday afternoon, we started at like 15, and I was starting to look at it like, we're going to trade the 18 handle today, because the action all day was, after the beginning of the morning, the action was, VIX really didn't back off much, even though the sell-off in SPX did. So that usually means you're going to see a little more upside in VIX. So I'm like, okay, and I sent out the note to my students because we had some leftover calls from those positions. And, it's one thing that's, I always tell, if you want to sell a contract and you own them, put in a good till cancel order. Get the order in there. It's like if you don't putt to the hole, it doesn't go in. It has to go past the hole, at least 6 inches, right? Or whatever. If you don't have an order in, orders that are never in will never fill. So if you sit there and watch it and then wait to put an order in, it might be too late. So, and when Henry said that thing about selling your hedges for money, like, yes, that's something I teach my students. Like, you take on days when you're making money on all the goofy stuff like SPY puts and VIX calls and whatever else you got on, you want to take that money and go buy, equity stuff with it. I mean, you want to hide under your desk sometimes, but that's usually the best time to buy anything, and when you're hiding under your desk. So anyway, I thought I think that squeeze might have had something to do with it. I'm curious Henry's thoughts about that, but the fact that there was so much open interest there, and settling for cash. And then what I found the most amazing is after trading like 18 VIX was just below 18. I'm going to say at 3:30ish in the afternoon on Tuesday. The VIX, the SRO was 1432, and which was totally shocking to me. So, I mean, if somebody was able to sell, if somebody had a passel of futures up there and sold them against their calls, again, which is possible, maybe squeezing up to a future print, because I wasn't looking at the future volume, they could have had themselves a day. I don't know if it was exactly the day they wanted or envisioned, but that would have been 300,000 contracts. So you would have had to sell a lot of futures to make money on those. But it definitely could have happened. But anyway, it was talk about a squeeze at the strike for sure.
That just, again, also exemplifies what we've said many times. Even on a week like this, when things looked like they were shooting to the moon on Tuesday, you still had, shall we say, a limited window in which to get those off, certainly for max profit potential, before you're chasing it down. Like it seems like you always are with these VIX calls. You're always, unless you get it into that sweet spot, like the Rock Lobster was saying, unless you have that order in ahead of time and they come take you out, beneficent folks that they are, those market makers, unless you're one of those. Yeah, you're chasing oftentimes with these things, which, again, that's a conversation we've had many times. I'm guessing we're probably going to have it again this week on Vol Views, but just fascinating stuff. Yet again, as we keep going around the horn out to the hinterlands, Uncle Mike, you must have been biting your nails a little bit on Tuesday, because it was decidedly not an Uncle Mike type of day. Then, of course, you and the rest of your bull friends got together on your little cabal meetings and decided to keep buying it, and now we've been green every other day. So what were your thoughts as you were watching this little bit of a wipeout on Tuesday, and what else is catching your eye this week?
Well, I mean, when you have the number, I believe it was the consumer price index, if I recall correctly, wasn't exactly what the market wanted. If you look at the trading of what actually happened that day, if you look at a daily chart of Tuesday, you'll notice that we didn't actually close that much lower than what we opened at. Did we gap down? Yeah, no doubt about it. Were we down a lot more? Yes, but I believe that a lot of the number came from just the pre-market gap, or which it did. And so in looking at it, for the time being, the market has somewhat adjusted to it, and that we're really close to where we were at the end of last week on Friday the 9th. So for the time being, yeah, it's always scary when you see the market down about 2%, but for now we're doing okay. We're at the 5,000 mark, the low of the, or we're above the 5,000 mark again. The low of the day today in the S&P was 49.99. We didn't stay there very long, so we did break the 5,000 mark, but we didn't go that far below it. So that's kind of where we are right now with stocks. In the bond world, we're still not going too much lower, but bonds are definitely something that's been affected recently with a little bit of a pullback in the bond world. Nothing too crazy, but it has been happening. So if you're hunting for yield, then bonds are actually a better place now than they were before. For where you are. In terms of some individual names, Apple, we are in bizarro world today in that Apple is down 1% on the day today, and we actually have the market up a little bit on the day. So we do have that happening. So ultimately, what I think this is just going to boil down to is that we have a while now until the Fed meets again. And so I think this is going to still be a Fed-driven market, but the Fed doesn't necessarily have to drive it. So in other words, let's say we pause at the next Fed meeting and everyone, let's say we going into it, everyone expects that we pause. It might be something to where we have the ability to have a non-Fed driven market if market participants are willing to accept interest rates around these levels. And that's what I'm seeing right now.
Let's see what we're seeing out there in the rest of the market, listeners. Is it a banger volume day? The answer is yeah. Looking pretty robust out there, listeners. VIX already at 580,000 contracts on the tape, which again, nothing to sneeze at, especially when you think the ADV just like a week and change ago was 640, 650. Now we have soared north. Obviously, CPI kicking into high gear this week as well. We're back up to almost 800,000 a day, 786. So VIX starting to resemble the VIX of old in terms of ADV. SPY also looking extremely robust today, 5.5 million. The ADV about 8.75 million out there. You know, usually this time of day, SPY's at 4 1/3, maybe 4 1/2. So fully a million more contracts than that. That's a lot out there in SPY. They like a good whipsaw. They like a good flirting with a key psychological level like 5,000 and then breaking through it in both directions. That's going to drive some flow in SPY. The S, same deal, 1 3/4 million. That's a decent clip, not quite as robust as what we're seeing out there in SPY compared to their ADV, but still a decent amount. Of course, the ADV about 3.3 million, so it seems like they're on track to hit that again. Small caps, like we mentioned at the top of the show, small caps kind of doing their own thing yet again and also delivering the volume. 900,000 contracts on the tape right now for small caps. That's more than the entire ADV was not too long ago. So small caps, again, they're exploding today, so it makes some sense. The ADV about 1.46 million. Yeah, they're probably going to hit that today. The weird lagger is the Qs, but then again, we were saying earlier, NASDAQ kind of was a laggard as well today, so some correlation obviously there. Usually we say the Qs are at around 2.2 million. This time of day, they're at about 2.07. So a mild laggard, but a laggard nonetheless. The ADV looking decent, 3 3/4 million. Will they get there today? If past its prologue, probably, but they're looking a little bit weaker than they normally have this time of day. But you know what, listeners? Let's get out to the single names. That's where a lot of the action has been. That's where we were kind of wringing our hands on the Monday show, listeners, because we saw a thing we have not seen maybe ever in the long history of this show, which was Apple kicked all the way to the curb, all the way down to number 10, 340 odd thousand contracts. It kind of buried the lead that it was another impressive volume day. You know, 340 is nothing to sneeze at in terms of volume to break into the top 10. But the fact that it was Apple and not some random biotech or tech name that we'd never heard of before, that was a little bit surprising. Has the worm turned with Apple, or is that kind of the case? Uncle Mike was just saying, we're in yet another day where the market is green and Apple is red. That used to be a thing that was not allowed. That was verboten in the Apple, or I should say in the markets of old, just a few weeks ago. So maybe that paradigm is broken as well. But let's get there. Let's look at number 10. Is it Apple again? The answer is no. Is it a robust level again? The answer is yes. 355,000. So single names are popping. Earnings season is delivering the goods from a volume perspective this year, listeners. What is still surprising, though, is that it is another stalwart of our top 10, another size A tech name coming in at the bottom of the list again today. Amazon. As you'll recall, Amazon was right down there with Apple last time, and now they're there again to kick off the top 10. They're not at number 3 or number 4 where they're normally hanging out. All the way down at number 10, 355,000 contracts. Amazon off about $0.75 right now, trading 170.25. You know, maybe we're also starting to see some stratification on the volume front in terms of the quote-unquote winners in this market, which is judged by who has the most skin in AI, and the quote-unquote losers. Apple, not really a huge vanguard player in AI. Amazon has some skin in that game, and it's growing, but they're not there with the Microsofts and the Googles and others out there and Palantir. So intriguing stuff out there nonetheless. Clearly, for whatever reason, maybe it's something else that is driving this anemic volume, but for whatever reason, yet another mighty A tech name has fallen by the wayside. Today, it is Amazon. Number 9, speaking of names that do some AI business, this is Palantir. This one fallen a little bit as well, but this is not quite the storied name as the others we're talking about here, so not as surprising here. This is Palantir, 363,000 contracts, up about 15 cents today, trading right around 25.30. They, of course, had their nice pop last week that we know the rock lobster was looking for. Number 8, speaking of AI names, this is the artist formerly known as Google. Now it's Alphabet. 386,000 contracts. Selling off today, $3.50. One of the reasons the NASDAQ is dragging. 142 and about a half. So, again, it's not all green on the screen out there today. Alphabet, again, it used to be just not that long ago. If we saw Alphabet in our top 10, we're like, man, this is a snooze fest day. Because Alphabet would do 140, 150,000 contracts. Now, again, this post-AI boom, different beast entirely. As we keep on. Speaking of beasts, number 7, Mara, 413,000 contracts. Man, this thing has been all over the place just in the last couple of weeks. Just in the last week alone, it's up 4.5 handles or about 18%. You look at it over the last month, listeners. Up to about almost 30, down to about almost 15, back up to almost 30 again. Actually hit 31.30 just recently. So yeah, just an insane name. Averaging somewhere around 600,000 contracts a day now. So putting up VIX-sized numbers almost just a few weeks ago. That was VIX ADV. So yeah, just crazy stuff. Or I should say Marathon today, 27.82. Actually giving some back today, off about $1.60 or so, about 5.5%. And again, good for number 7, 413,000 contracts. Number 6, AMD. A lot of blood on the stalwarts today, which is kind of interesting. AMD also selling off about $1.25, trading 177 and about a half. Good for 444,000 contracts. So the A tech names, at least some of them, not looking great today. Number 5, this one made all the headlines earlier this week. Kind of the quintessential example of, man, why don't we have after-hours options trading, is for a name like this. This is Lyft, listeners. Trading about $19.20 today, up about 280, so 17%. Nice little pop for them. Of course, you probably heard earlier this week, they had a little bit of a snafu with their earnings call. I think they 10x'd their EBITDA or something along those lines. So the stock shot up 60% in the after hours and came immediately back down. So it was very challenging. We debated that and discussed that a lot on our options bootcamp this week. So if you want to dive deep into why we don't have after hours options trading, or maybe some things you can do when you can't trade the options in the after hours, check out Options Bootcamp, even though I know a lot of you already have. Lyft, number 5, 496,000 contracts. Number 4, and now we're getting back to territory we kind of expect for this name. This is Apple, 675,000, a little bit lower on the list than we're used to seeing it, but also a respectable number given this new flavor, this new incarnation of Apple. It's kind of hard to argue that Apple is the Apple of old. It sells off routinely now in the market rallies. It's doing volume numbers that are not really what it used to do. 182.20, off about $2, a little over 1% today. Apple, of course, very much featured in our question of the week. We'll get back to that a little bit later. Number 4 today, 675,000 contracts. Do you think the worm has turned in Apple? Have we seen a paradigm shift out there? Might be a good question of the week coming up. Let us know your thoughts. Number 3, this is the frequent offender. This is, of course, Meta, 735,000 contracts. Meta feeling their oats today, 487.5, up $14, or about exactly 3%. So bit of a banger day out there for Meta. Number 2/1, it used to be able to guess these with pretty much certainty. It's kind of got a little bit topsy-turvy now with all this AI madness. Recently, it was NVIDIA taking the top spot. Did they take it again today? The answer is no. NVIDIA, number 2, 789,000. 731 and even, pretty much off about $8 or 1% today. So not a banger day for NVIDIA. And then number 1, almost as if they're trying to say, hey, get the heck out of our spot, all the rest of you upstarts. It's Tesla roaring back with a vengeance on the stock side and on the option side today. Tesla up almost $9.50, trading a little bit north of 198, up about exactly 5%. Looks like just the Delaware stuff going on with that company. Who knows? Day that ends in Y. That's what's moving Tesla at this point. But over 2.12 million contracts. We've not seen this kind of numbers out of Tesla in a little bit. Again, it's almost like it's a response after they got kicked to the curb so rudely by NVIDIA earlier this week. Now they're coming back with a vengeance. Are they going to keep the crown, or is NVIDIA just taking a respite before their next try at the king? I guess we'll find out. The rest of this week, we had some banger numbers as well. We had Coke, obviously, on Monday, and Marriott. Hasbro, toys no bueno out there in Hasbro land. Yet another bad quarter for them. Robinhood surprising some people with their numbers. A lot of that on the back of crypto, but also Transactions looking decent, which people are looking for. Obviously, we just talked about Lyft. Wednesday, our friends across the river here, CME, also Sony, and Uncle Mike's favorite, Cisco. And then today we have rubber shoes, aka Crocs, Yeti, everyone's favorite, Oatly, kind of screwing the pooch before the bell. They made more money, which is good, but other things screwing up out there in oat milk land. So yet another day in ends in Y in the ongoing saga of pain that is Oatly. Wendy's, easy for me to say, Wendy's. I'm still screwed up by the oat milk listeners. DraftKings, Coinbase, Roku, and other. Oh, and another little name called Synovus. We'll get to that in a little bit out here. In terms of earnings data, you know where to go to find it all. TheOptionsInsider.com is the place to go. We got to get on out of here, though, and into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by TheOptionsInsider.com. It's time for the Odd Block.
All right, everybody, let's get weird. Let's get wild. It's the Thursday show, so you know the FLOWMASTER is champing at the bit. Before we get to his fun, Mr. FLOWMASTER, we got to dive into this one first. This is the trade we've been watching. A little birdie tells me you've been doing. But it's been a fixture on the show for the better part of the last month. Yes, we're talking about everybody's favorite Synovus Energy, ticker symbol CAVE. We started talking about them pretty much close to a month ago. Paper came in just loading up on size, as you'll recall, listeners, of the Feb 17s. They bought them for about almost 70 cents, just gobbling this stuff up 10,000 at a time. Kept buying more of them, even as the stock looked worse and worse. They also bought 25,000 of the March 18s. Kept buying more of those. A lot of people really grokked onto this story. A lot of our listeners were tracking along with this one as well. There was a lot of speculation from our audience about what they were actually up to. We thought the way it lined up, it looked like a pretty clear earnings trade. A lot of people were coming in saying, no, it's actually geared around this pipeline proposal meeting that was held in some rural province of Canada. Turns out that came and went. The project was approved and the stock took a beating. So these were looking pretty bad for a while. But fast forward to today, Mr. FLOWMASTER, Synovus having earnings this morning and popping pretty hard as a result, up about $1.30, a little over 8%, trading right around $17.56 right now, listeners, which, as you'll see, they bought the 17s, a whole bunch of them. So not quite printing money, but at least on the early prints, they're not. But looking a lot better than they were a day ago. Mr. FLOWMASTER, I know this is one you've been tracking diligently on behalf of our listeners and perhaps sprinkling a little trade action on too. What are your thoughts on how this CAVE is playing out?
So this is an interesting one. I just put in our chat a screenshot of Trade Alert, just kind of showing the accumulation of those Feb 17 calls, because it is what we've been talking about. And it just kind of seemed like they just kept buying them. You can tweet that out or do what you'd like with it. But, this was enough, without kind of doing a boatload of research just to see, 30,000, 10,000, 15,000 bought in kind of that 50, 60 cent range, creating new open interest. I decided it was worth a long position in the stock. So I've been long, and it does go back a couple dollars. I think we first might have even noticed it around $15. Now, what's funny is it did get a pretty decent move on earnings. Initially, it was barely above 17, and now we're pushing 17.60, so around 8%, which is about what the straddle was pricing in. I think straddle was pricing in maybe a little bit less, around 7%. This call buyer, maybe they're going to break even, but they're not. This wasn't really a home run. They really got hurt by the fact that, they put this position on almost a month ago. So they might have traded some gamma around it, because there have been some chances. But this is kind of one of those, like I've said before, when I see kind of heavy directional flow, it's easier to first buy a little bit of stock and then go and do some work and try to figure out what option position makes sense based on the kind of trade you like to put on and where vol is or how steep the skew is. So, but this is a good one that worked out, and I think I'll keep it on for a little bit longer.
Yeah, you made the right choice on the stock because you're right. The calls, they're kind of struggling to break even. I'm sure they'll take this move today. It's better than where they were a day ago, but these were looking pretty rough. The stock actually in the interim, this was a weird one too, why they put it on so early. You're right, when they were going for earnings. The stock took a beating almost immediately after they started buying these. Stocks sold off to about $14.90 when it was around $16.50 when they started buying them. So they took a drubbing early on. I suppose if you came in late and bought some of these last series when the calls were around, 20 cents, then you're looking good today, but they did not do that. They were buying them the whole way. So kind of a bit of a rough one, but hey, they ended up, looks like, I haven't looked to today's paper if they're taking them off. Hopefully they learned their lesson from our VIX friend and are taking them off. Mr. Rock Lobster, you were watching this one with us as well. What are your thoughts on how this cave trade played out, sir? I like Henry said, it took a little while. They got a move eventually, but at least it looks like they got a shot. So they got a shot, which is better. And I remember seeing this volume last summer, and I got kind of taken to the woodshed on these. And after I get like slapped in the nose by one of these, I just I wait. So Henry's idea of just buying the stock, by the way, like sometimes, when you don't have any kind of sense of duration, like just buy the stock. It's a lot easier. So Henry, as the old Wall Street pro he is, so I've ignored it since then. I accumulated other like oil and gas stuff this last 6 months when it was kind of going in the dustbin. So, but I've ignored this one just for that reason. But even this person who's right, they're right eventually, just not right enough yet for the calls that they bought. But I have to say today is the most solid day I've seen for oil and gas in a very long time. Like among some calls in Apache that are finally green today for the first time in a while, like since I put the position on. So I'm probably going to exit them at the end of the day, just take my loss that became a win and get out of town. But anyway, that duration can be a problem. Like if you don't have a sense of duration, just easier to buy the stock, to be quite honest. Should also mention they did buy some March 18s as well. Those obviously have longer time. Those could look better net, but the early one, I just checked right now while Rock Lobster was talking, 8,300 only have traded today, and they've traded most of them for 35 to 40 cents bailing on them. So if they're dumping them for 35 cents, then it's still an ouchie here. They're not really making money on these. Hopefully they're getting some better levels on the rest that they're sitting on. Let's keep rolling with what the FLOWMASTER spotted today. Let's go out to Johnson Controls International PLC, ticker symbol JCI. This is an American-Irish multinational HVAC conglomerate. So this is the second time we've been talking about HVAC in the span of the last week. All of a sudden, is this a hot sector? I guess we'll find out. Trading 57 3/4 out there today. Let's see what's on the year, off about at $7.50 or about 11.5%, even if they are popping about 2/3 of a buck or about 1% today. A year ago, they were trading $65 and they came for it, drove it down to about 56 in April. Then they rallied it to their high for the year of about exactly $70. And then that was all she wrote for this name. They fell off a cliff literally the next day. Their Q3 earnings were terrible. They plummeted about 10%. And then they kept plummeting all the way down to Halloween pretty much, where they hit their nadir for the year of $47.90. And then since then, they've tried to rally it a few times, got it up to about $58 in the beginning of January. Then it sold off again down to about 52 end of January, and now it's back up to about 57 3/4. Where we find the FLOWMASTER today, sir. Mr. FLOWMASTER, what caught your eye out there today in JCI, sir?
Yeah, so this actually showed up on the Trade of the Day report, which I owe you some collaboration on to see if we can get something for the listeners. I know people are dying for it. And it is such a fun report to look through because, so I noticed on this one, so Johnson, the biggest, one of a 200, a doubler, basically something that doubled somebody's money, was kind of buried in the flow. So yesterday in JCI, the call volume was 31,000 contracts. Sorry, actually, I think a little bit more. Yesterday it was 45,000 calls versus 7,000 puts. And kind of when you go and you dig into it, it looks like there's a couple of structures. There's a March 57-60 1x2 call spread. And then there's also some March 60-65 regular call spreads. And when you look at what the net open interest changes were, is basically the 57 halves didn't really change. So that appears to have been a closing leg. And what you have out there is 18,000, the 60s that are new, and 5,065 calls that are new. And the trade that I was specifically looking at happened to be a simple 1,500 lot of the March 60 calls that I don't actually see matching up with any of the packages. So this was just a 50-cent call buyer. It was actually done as a sweep, so we know it wasn't actually part of a spread. And they paid 50 cents for 1,500 of them. Stock was at 56.41, and those calls finished at $1. Actually, even I think a little bit above $1. And then if we look at where they are today, since stock's up even a bit more, what do we got? They're trading currently 95 cents $1. So it's just it's funny. It could have been somebody that saw the heavy call volume and didn't quite know what was going on, but just kind of took it at face value, which is like, wow, that's a lot of calls. And they got in, but they did manage to take a nice, simple, defined risk long call position and double their money over in the same day.
Nice to see some people actually making some money, taking some stuff off, which is interesting. Mr. Rocklops, any thoughts on a bit of a funky 1x2, sir, in everyone's favorite JCI?
I believe we did. Didn't we have Carrier? Like
we had Carrier
been doing this show for 10 years, and this is the first time we have seen not only one call, one trade, but then we had another one.
Back-to-back HVAC. Dare I say it? Is HVAC the new biotech?
You know what? I'll tell you what. I've been waiting for if the demand for HVAC equipment. Let's see. I'm on 6 weeks now with no heat in my house. So in the middle of winter in Maine, waiting for a part. So if that kind of demand is any indication anecdotally, I would say, yeah, Mr. Johnson controlled person here is going to make some money. So they in for 53 cents and they come in over $1. Like, who makes money getting long these kind of things and, these kind of 1x2s and making money, especially when you pay money for them. So all I can say is good on them, at least at this point, is what it appears to be. So again, like it's so beyond out of the pale for us, right? Because we're still looking at March. They still got some time to run on this.
They do indeed. And speaking of running, this last name is running here. Mr. FLOWMASTER, I'm glad to see you landed on this one. This is SoundHound AI Inc., ticker symbol SOUN. Because the Rocklops and I were just talking about this, I believe it was on Oddities not too long ago. Just some funky paper that caught our eye out there. Just a hilarious name, SoundHound AI. It's been around for a while, but just the name of it, throwing AI in there, it's always fun. But making a move today, 380 up about $1.50 or 67%. So NVIDIA discloses a stake, I guess, in them. And there we go. That's all it took. So somebody sounds like they were maybe sniffing around this. I need to go dig up the flow that we were talking about earlier. But Mr. FLOWMASTER, what caught your eye out here and everyone's new favorite, SoundHound AI Inc.?
Yeah, so this one, I think I have a couple screeners that just look for what I would consider to be insane meme style activity, right? Which is going to be big volatility jumps and stocks going up more than 10, 20, 30%. This one kind of hit on all sides. So the vol's up about 80 points to kind of close to 200 in the front term. Stock's up 68%, like you said. And if you look at the put call skew, right, this, the 25 delta point, you get the 25 delta calls around 250 vol in the 30-day, which is about 30 points above the puts. So it's one of these, it's without a doubt kind of has all of the attributes of what we'd usually call some meme stock behavior, some short squeeze type of action. I mean, there's, we've lately seen a lot of major money pouring into anything with AI in the name. The market's very fickle, right? When we had the down day, everybody wanted to have everything that was speculative, but people have come back with a vengeance. And actually, our macro strategist Mandy Zhu was just on Bloomberg talking about how kind of it's getting a little bit frothy with some of the meme day style feeling. So I'm running. I'll send you the results when I finish. I have a query that basically counts the number of symbols trading with inverted skew conditions. So with that call wing exceeding the put wing, and it's really, it can be very illuminating just to look at the count of symbols where you've got, we know that's kind of the speculative takeover style pricing. And, there's kind of, usually historically there'd be maybe 30 or 40 of them because there's always takeover specs out there. But when you see that number go up to 100, 150, and actually I'll see if I can take it back to 2020. In 2020 and 2021, we had, periods where there were a couple hundred names trading that way. And so I've mentioned this before, that brings in all sorts of other people that want to trade, and even if you are a bull on the name that you're talking about, call spreads where you get to sell the out of the money call at a higher vol than what you buy the, an at the money or an in the money at, become awfully cheap. So all sorts of people jump in and like to play in that conditions.
Yeah, and I found what we were talking about. It was actually the Monday show. We were talking about Sound, everyone's favorite Sound AI here. But it was a bunch of puts going up on Monday. It was the March 2 puts going up about 10,000 times. Looked like paper was buying them from 20 all the way up to 25 cents, including a big block of 23 cents. So if that's the case, then maybe they got the wrong memo if they were trying to insider trade this one. Because, yeah, that's still the size open position in Sound right now. 16,500 of these March 2 puts are open. So if they paid 20 cents for the 2 puts, unless we get a big turnaround here, they are feeling a little bit no bueno. And, man, we are coming up against it. We've been talking about a lot of fun trades today. So let's keep on rolling into Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, where we tell you what we're keeping an eye on for the rest of this week into the old weekend. Remember, long weekend this weekend, so no Monday OB, so you have to wait till next Thursday to hear us again, at least on the old OB. You don't have to wait that long to play in our question of the week. It is still hot and live right now. We started this coming off of our debate on the Monday show. At the time, Tesla and Apple are both trading around 188. Man, they both lived very different lives since then. Tesla now threatening 200, Apple threatening 180 in the wrong direction. Actually, then we're still asking you now, which of these would you rather buy, gun to your head, when they're trading about the same price? We also threw a few extras in there just for fun. You know what we do. So it was Apple, Tesla, or I'll stick with crypto, or I'll stick with VIX/vol. And 37.8% of you right now are going for Apple, 31.1% going for Tesla, 18.9% going the vol route, and then 12.2%. It was taking about 25% of the vote early on. It has now fallen to 12.2% out there for crypto. Make your voice heard. At Options is the place to go. As we go around the horn, Mr. Uncle Mike, sir, a topsy-turvy week, a crazy week, a not Uncle Mike, then Uncle Mike again kind of week. What are you keeping an eye on now, not just through the weekend, but all the way through to our next option block next Thursday, sir?
Oh, well, of course, 5,000 on the SPX, and then have a lot of covered calls that are close to their strike price. So in our triple income portfolio, I'm going to be doing a lot of adjusting come Tuesday, most likely. We'll see where some things go, and then I'll be doing some adjustments tomorrow, getting out before expiration. So I'm going to be the covered call trader over the course of the next 4 or 5 days, or, well, Friday and Tuesday, I should say, anyway.
All right. And Mr. Rock Lobster, same question for you, sir. What are you keeping an eye on until next Thursday, sir?
Well, we have a PPI number tomorrow. We have a market up vol future day today. We're rallying on who the heck knows why. And I am of the mind too, if the market gets used to the fact that this interest rates are just going to stay here, and I think that's Powell's diabolical plan. Everybody just, okay, this is an economy with real expensive interest rates and tacos, and that's kind of how we're going for the future. So we'll see how the market reacts to the PPI tomorrow, but as usual, they'll just keep buying it because they're going to realize rates aren't coming down anytime soon, and on we go. So in general, stocks go up.
There we go. He's holding his nose, but he's buying it all, listeners. And Mr. Flowmaster, same question for you, sir. What are you keeping an eye on until your next appearance next Thursday?
Sure. We still have some earnings out there that'll probably be kind of fun. I think Coinbase is tomorrow. No, Coinbase is today after the close. And then next week, we've got next week's NVIDIA and things like Carvana and Nikola. I'm going to be watching some of these macro factors. It's really interesting, right? We had a sharp sell off this week on macro, news, and that specifically hits the small cap sector. Also can kind of hit the energy sector. So it is interesting, right? There's the energy complex is really, I saw some headlines saying that natural gas was cheaper now than it was in COVID when the world was shut down. So, that's kind of astounding too. So looking at the macro factors and also kind of watching some earnings. And I agree, it's like if you're overwritten and you're right up towards your strikes and we're going into, Feb expiration is tomorrow. That's kind of a wonderful time, but you do have to keep an eye on things. If you don't want to get that stock called away, you might want to roll it.
And we got to roll this show into the next show. TWIFO coming up in a little bit. Listeners, stay tuned for that. Should be a fun one, bringing down all the action in the world of futures options. But before we get there, let's go back around the horn. Mr. Flowmaster, start with you, sir. If folks want to check out all this cool stuff we're talking about the Eye of Sauron, but also you mentioned your trade of the day. You also mentioned your multi-skew analysis and all the other cool stuff you guys are cooking up over there in CBOE land. Where should they go? What should they do?
CBOE.com/RMA, which stands for Risk and Market Analytics, and we'll be happy to set people up for trials and walk them through the functionality.
I would love a button that could just hit to have the skew breakdown for the entire single listed market. So that would be pretty cool. I'm just saying, just putting a little word out there to your whirling dervishes behind the scenes. One button. That's all I want. Check it out for yourselves, listeners. A lot of cool data. We kind of just scratched the surface here in our 1 hour show. CBOE.com/RMA, the place to go to kick the tires and light the. Don't worry, I'll keep pressing the Flowmaster behind the scenes to get even more cool stuff out there for you. And Mr. Rock Lobster, if folks want cool stuff from the land of the pit, where should they go? What should they do?
They could go to optionpit.com and tell Ted you get 10% off any of our goodies. And Mark is doing a webinar tonight on how to deal with this mega cap trend. So go surf on over to optionpit.com and sign up and get your learning on.
The way to deal with it is to buy puts in SoundHound AI Inc. Oh, wait, no, that didn't work out at all this week. OptionPit.com, the place to go to learn not to do that. And Mr. Uncle Mike, sir, if they want to learn how not to buy puts in crappy names, where should they go? What should they do?
How not to buy puts and crappy names. Check out my website, stcharleswealth.com, or follow me on Twitter at Mike TOSAW.
Well, I guess you do want to buy puts in the crappy names, but not the crappy names that someone else is about to buy a huge chunk of for an overvalued valuation. So there we go. It's a very, I'm splitting the hairs there, but check it out for yourselves. At Mike TOSAW on Twitter or stcharleswealth.com is the place to go. We got to get on out of here. Back again for all of our pro folks in a little bit with This Week in Futures Options. Got a great guest joining me to parse all the madness going on out there. Of course, if you want to join us live, theoptionsinsider.com/pro. Back again tomorrow for, of course, volatility views. Who shall join us in the Vol Hot Seat tomorrow? You got to tune in to find out. Should be a fun one. And then after that, exclusively for all of our pro cats and kittens, we're back again. You like all this stuff we're dropping here, all these sound and everything else? We do a whole show all about it called Options Oddities. Only place to get it, theoptionsinsider.com/pro is the place to go. Then we're not back on Monday. Everybody's off for Monday. Have a good President's Day. And for this show, we're back again on Thursday, another episode of the Option Block. Stay safe out there, everybody.
The Option Block is brought to you by CBOE. CBOE's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.